What's up, everybody? Welcome to Solana Weekly. This is your host, Thomas, and I want to thank you for joining in. Let's take a dive into the latest trends, use cases, and people behind the incredible growth of the Solana ecosystem. None of this is financial advice, but I'm hoping that all of this is alpha. Now let's get to the show. Today, we are joined by Usman from Oro to tell us all about how he's bringing gold on-chain to Solana. Usman, welcome to the show. How are you doing?
Good. Thank you for having me, Thomas. How's it going?
Oh, it's going great. It's going great. We're surviving the market right now.
Yeah.
And what a good time to be bringing gold on chain, right? Meme coins are dying. We need some sort of store of value. Are you going to save us?
Yeah, no, 100%. To be honest, I feel like it's been a great time since last year. Our launch has been slightly delayed, so it's always been like, we had this message. You were in that group as well, but one of our angel investors was like, "Hey, when are you going to launch? When gold's going to hit $3,000 per ounce?" And I was
Yeah.
like, "It's pressure's on, right? Because and gold might hit $3,000 per ounce before we launch. I don't know. Hopefully not, but I think it's a phenomenal time. The macro trends within the gold market are extremely positive. I think we're entering into kind of in a way unprecedented sort of territory, at least from within our generation, on how
Yeah.
this asset is going to behave. And I think it's the demand for this asset is skyrocketing, but it's also about what can we do more uniquely with this asset that's not been done before, and that's what I'm more excited about, right? Because actually, I don't think the thesis for us to bring gold on chain is cool, but it's been done, right? It's been done with a couple of other players, obviously not on Solana, but outside of Solana.
hmm
And so for us, it's like, hey, what can we do that's like more unique and more interesting with it than just let's tokenize it.
Yeah. Yeah. Yeah, that sounds good. And I mean, every podcast that you listen to, everyone in crypto thinks they're like a macro expert, right?
Yeah,
So I listen to a ton of macro podcasts, and it's like pretty much every single one of them is like bullish on gold and then maybe Bitcoin as well, right?
yeah,
So it seems like the perfect time for this. And I mean, aside from today, gold is pretty stable and it's just been going up, right? Like it got pretty close to that $3,000 number,
yeah,
and then it tanked a little bit, but nowhere near the amount of tanking that we're seeing in the meme coin markets right now, right?
yeah. I think the like over the past year, it's like 40% up,
Yeah,
which is, it's like for an asset like that, it's a great balance to the portfolio, right? And so yes, there is like intraday volatility, but it's also like not as much as you would see in any asset. So it's pretty much kind of one of the safest assets one could have in their portfolio. And historically, we've not been used to see this crazy amount of growth, right? It's
yeah,
always been, it's actually been decent, right? Because I think also being crypto, sort of our sort of let's say sort of the appreciation that we see in assets is perverse as well, because if you were in the normal TradFi world, your S&P 500 giving you 7 to 8% return a year, that's seen as really, really good, right? Because when you
yeah.
sort of compound that over 10, 15 years, that's like a lot. And actually, a lot of people don't know, but gold is also, for the past 40 years, has appreciated at a rate of 7 to 8%
Per
annually,
year?
right? Per year, exactly.
Oh, has it
And
really? Oh,
yeah, and so that's kind of like a lot of people are not aware of it. I think there's actually been like I was speaking to one of our gold leaders today, and gold kind of went through this really crazy sort of bad marketing phase in the 70s and 80s where people sort of, if you look at historical stats, gold used to sit like around at least 10 to 15% of people's portfolios in the 50s and 60s, and that sort of reduced, and now gold sits the average is around 0.5%, right?
oh,
And so
really?
gold was like a really sort of lack of marketing phase, and it was replaced by stocks and equities and and bonds. And now I think we're sort of re-entering this world where I think the sort of we're going to go from, I think the expectation is from 0.5% to at least 2 to 3% in the next couple of years. And the what investment advisors do advise now is, hey, it should at least be 5 to 10% of your portfolio. So that will be super interesting to see because it's going to drive a lot of demand. But I always say like we're planning the marketing, and this is something we might use later on, but we're not using it for a launch, unfortunately. But gold is kind of the the original meme coin in a way, right? Because it's like 2,000 years of memetics reinforce of what this asset means. Because who decides all of these things. It's ultimately it's metal, right? But it's 2,000 years of memetics, cultural sort of reinforcements of what this asset means, and I think this is going to be, this sort of reinforcing of this is, one of the reserve assets in the world, which is acts as a hedge against inflation, acts as a hedge against political uncertainty, is going to sort of play out quite spectacularly, given kind of not just the economic climate, but the political climate of us who are sort of being entering this very unique era, right? When we think about kind of Cold War, we were not. I mean, none of us were born there. I mean, at least both of us were not, right? But I think a relatively stable period of time after sort of the Berlin Wall fell, after Cold War ended, and now I think we're entering into kind of a more, again, like a very sort of interesting multipolar world, which will lead to a lot of sort of political shocks and political uncertainty, and again, gold becomes kind of a sort of supreme asset to defend against a lot of it.
Yeah. I mean, gold is basically like the best store of value that we've ever had as a civilization, right?
Exactly.
And a couple of things I think are like very important for Solana is Solana's like kind of searching for a store of value, right? Like there isn't necessarily a good one, right? Like and you'll even hear Toli talk about this. He almost explicitly says Solana is not a store of value. Like the Solana coin is not a store of value. And then, I mean, you have wrapped Bitcoin assets on Solana where it's like, that's an asset that's bridged over from ETH and held in some weird multi-sig that maybe Justin Sun has multiple keys to, right? Or Coinbase has it, right? So there are a couple different wrapped Bitcoins. I really like the Ore coin, which is basically like Bitcoin on Solana. But it's like all of those they're not like set in stone, right? So what I think especially in Solana people do is they just use dollars, right? They use stable coins, they use USDC, and that's kind of been the core of Solana is like how well integrated stable coins are. And it's like, that's not why we're in crypto, right? Like to come into crypto, to come into this whole decentralized system and just use dollars, it seems like the wrong way to do it, right? So like what I'm really excited about is to see a good store of value come on chain that we can use on Solana, that has been tested for thousands of years, and then not only just have that on Solana, be able to actually use it in a better way than you could use gold in real life, right? Like there's always the argument that you're not going to go pay for something at the store with a chunk of gold or something along those lines, right? Like gold coins, maybe they're around, but it's not really going to be used. But if you could send a small increment of that on Solana, I mean, that gets rid of that. Like that opens up so much, I think. I don't know what you think about that. But that's kind of like where my mind's going on this.
No, I agree, right? And I think what is super interesting is like when people think about stable coins, right? Theoretically, they're not stable, right? I mean, because people forget that the dollar depreciates. They're stable relative to other assets, but theoretically, they're not stable. And so I think this idea of kind of this sort of programmable gold, right? Which then you can actually, that is, I would say, the definition of what a stable coin is, if I'm being honest, right? Again, branding and cultures in crypto are just driven by a lot of the other factors. But I think this kind of store value asset, not just I think with Solana people, but I think this is globally, right? I think this comes down to kind of one of our theses, which is that people are looking for this asset, they're rushing towards it, but it's not as easily accessible as people think it is, and so actually using kind of building on Solana is being able to widen that accessibility for such an asset in a very cheap and performant way, which maybe other chains are not able to do that, right? And again, I think having that for the crypto native audiences as well, to kind of, I think what's also happening is that you see sort of Solana users, obviously there's a lot of activity relating speculation, a lot of trading, but there are, as you said, there's a huge growth and huge sort of demand for stuff like Carrot, stuff like Lulo, which shows that the users are also now becoming slightly more sophisticated, and they're learning a lot more to say, hey, let's not put all our eggs in one basket, or there needs to be a chunk of a portfolio that's on chain. I've made some profits. I'm gonna put them in more sort of safer yield bearing assets. That's pretty cool, right? And that's, I think, hopefully we kind of fit into this puzzle over there as well, which is, again, we've got some yield bearing elements, but I think it's I don't, and again, like I think it'll be nice to see how we kind of work with the other protocols like Lulo and Carrot as well at some point. But I think it's a nice puzzle, right? Because then you want to give. I think if you're an investor and you want to maybe put a bit of money in Lulo, you want to put a bit of money in gold, you want to put a bit of money in your stocks and shares, because that's how a sophisticated investor behaves anyway, right? Your 100% of your assets are never in one basket, right? And they shouldn't be. You kind of want to
Yeah.
spread it across your different sort of risk parameters in different asset classes, which then gives you like a quite a strong portfolio return, hopefully.
Yeah, well, that's the way that crypto cycles go, right? Like
Yeah,
you look at the Bitcoin chart, that will tell you the cycle, right? Every couple of
yeah,
years, it goes up and it goes down a lot, right? So,
yeah,
but you always see people round tripping a ton where it's like, you know what, we actually need something to counterbalance that. You know, not everybody's going to, you know, perfectly hedge their account. Not everyone's going in and, you know, having shorts and perps to
yeah,
make sure that they capture the value. The way to do that is to actually have like a good, well balanced portfolio that, you know, part of it isn't going to go down with the rest of the market. So
yeah,
I think now is a good time to bring it up. I mean, especially we're seeing a good example with a dip in the market. Solana's down 50% off of its top, and gold is, you know, what is it, 5% off the highs, right?
yeah,
So it, you know, we're just kind of seeing the volatility in cryptos, which is what we like.
yeah,
Everyone talks about how they like it, but nobody likes the volatility to the downside, right?
yeah. I think that's the returns are, you want the volatility in the upside, but not the downside, especially if it's a
Yeah,
longer period of time, right?
yeah,
Um, and that's why I think assets like this. I think it's also when you kind of have more intrinsic assets that makes, I think, wider adoption easier, because when we kind of look outside more than just this existing sort of user base of crypto retail who are speculating a lot. I think a lot of the growth that is coming has come in the past year and is going to
hmm
continue to come is outside of these use cases, right? Stable coins and emerging markets, real world assets. And I think having more assets like this allows for more and more interesting primitives to be built, which hopefully then we can kind of reach a wider audience to actually solve real problems as well. So that's all.
yeah.
I think it kind of like, great store value for assets, but also I think allows people to sort of, for us to widen it and offer more products to kind of the general audience as well.
Yeah, well, and I mean, when you think about, you know, retail coming to the market, I feel like it's maybe not common, but I feel like a lot of people look at it as like, all right, as soon as retail comes in, that's the top because retail is going to get dumped on, right? Like, what we don't want
Yeah,
that at all, right? Like, we want people to
exactly.
come into crypto and continue using it, you know, find growth, find something that they like. And I think now is the first cycle where we actually have products that people are going to want to use regardless of the price of Solana, right? Like,
Yeah,
I think that there are, I mean, even you brought up Lulo. It's like Lulo is a fantastic protocol, right? Like you can get 8 to 20% yield on your stable coins. You
yeah,
can't get that in a savings account, right? Like we
exactly.
had we had we had really good times where, you know, interest rates were high and you could get almost 5% in a high yield savings account, and historically that's really good. You know, Lulo beats that by multiples, right? So
Exactly.
if people are able to stick around and continue using it, like Solana is easy to use, right? It's
Yeah,
0.005 cents to for any transaction, and the UI really makes sense to a lot of people. So I think that we see like more and more users. Like I said this before, but it's not necessarily going to be like the super cycle of coins going up only. It's the super cycle of users coming to the chain and actually using it and staying.
yeah,
Um, so
yeah. Agreed. And you have to. There has to be a reason for them to stay, right? Which is where a lot of our kind of hopefully all the products that are coming up make them stick around, right? Because it's like ultimately, if you're somebody who's, you've got your savings and you want to earn a good yield on your savings, majority of the people don't want to be speculating, right? I mean, at
yeah.
least in kind of the normal world, everybody has got a different risk appetite. So I think that's going to be, you want to build products for that kind of audience, which then exactly gives them a reason to stick.
Yeah, and even the people that do gamble, they're not gambling 100% of their portfolio all the
Exactly.
time, right? Like especially
Yeah.
people that are doing this professionally, right? They're, you know, maybe 1% of their portfolio on a really risky trade or something like that, right?
Yeah.
Um, and that's the people that we also want to attract, right? We want the
Yeah.
professionals that are doing this, you know, in the stock market, in the bond markets. Like a lot of them see the most value in crypto, but they just see, the latest meme coin go up and down or the latest scam, and it keeps them away. Where I
Yeah.
think we move past that.
No, I agree, 100%.
Sounds good. So I got a question. So how do you actually bring gold on chain? Right. So I know that if we go into your history, your family has
Yeah.
been in the gold industry for like it's like 100 years or something,
Yeah,
right?
I think it might be like 150, 200, but
Oh,
we've kind of
really?
we've kind of been able to verify it for like, I think 100, almost 110, 110, 115.
Amazing.
We were not able to go as much further back, but I reckon there is some sort of longer connection. But a century is still pretty long, pretty amazing,
Oh, yeah.
right? Yeah. Yeah, I mean, I think from kind of the question that you ask has obviously sort of multiple facets to it, right? The more sort of operational facet is you have a physical component, and so for that physical component to come on chain, you need to sort of establish certain legal parameters where this goal that exists to actually say it exists, right? So
Yeah.
for us, it's like working with established dealers within global gold markets, obviously starting from Dubai,
Hmm.
and then there's gold that whatever is kind of purchased, and we obviously have some in inventory, some as we go along, we kind of build a TVL up. All of that is kind of verified in a monthly basis by third-party attestations, and stored by independent third-party custodians, right? So it's not even stored
Okay.
by us. It's not even stored by our dealers. It's stored by third-party independent custodians in their vaults, which are fully insured, right? And then that's verified by third-party custodians.
Okay.
And so that's kind of, and then you kind of, that's the more physical, the physical aspect to it. But then you have your legal, where that gold is always stored, or gold is sort of kept in a more sort of bankruptcy remote structure, where if everything blows up, Solana blows up, we blow up, and literally that gold exists, right? And that's one of the beauties of real world assets, where this gold exists, but it exists in for the token holders who effectively will purchase the tokens, right? And so that's how kind of the beauty of it as well, that hey, like there's this asset that's going to exist throughout this time.
So okay, so you're actually holding inventory. So, and is that like directly correlated with the amount that you guys are issuing on chain? So
Yeah, exactly.
say
So
there's an order for you guys get like an insane amount of demand, and
yeah,
somebody wants to buy $1 billion worth or something along those lines more
yeah.
than you guys have. Is there going to be like a limit that's capped? Like, hey, this is actually our supply right now. We can do that, but we need to buy more type situation, or how would
So
that work?
the benefit, so there's two aspects. The benefit of being in a place like Dubai, and obviously we have access to markets like Dubai, but also London and Singapore, is that we're not necessarily constrained too much by supply at this point in time. Obviously, if it's $1 billion, it's not
Yeah.
going to be as quick to execute.
Yeah.
And
Yeah.
when I mean as quick, maybe not in the next 10 minutes, but maybe takes us a few hours to sort of source that supply out. But the beauty
Hmm.
is that Dubai has like an insane amount of annual imports that come in, almost 20 to $30 billion of imports just come in annually from Africa, and that's one
Oh,
continent
crazy.
where there's a huge amount of influx of imports that are coming in every single year. So Dubai is like, actually, from a supply point of view, it's never been challenging, right? So for us to actually source that amount of supply is not difficult, but thankfully we work with like established gold dealers who have that pipeline.
Hmm.
And so the way it kind of works is we obviously have, on a daily basis, we'll have a significant amount of treasury always minted. But let's say if it's somebody comes and they're like, hey, we want an X amount of gold, which is above our treasury amount, then we
Hmm.
should be able to execute it within 5-10 minutes, right?
Oh, wow.
So it can be
I
as
didn't know it was that liquid. I didn't know
yeah,
that
the gold
that would
markets are
be.
very liquid, right? Obviously, it's not 24/7, and that's one of the ideas that we want to bring it on, kind of making it more 24/7. But
Yeah.
they're very, very liquid, right? And so for us, the intention is, hey, how can we kind of obviously execute that sort of minting and redemption piece? So what the pieces that we have are, it's falling a bit more like a circle and tether model, right? Where we're minting and redeeming, and then hopefully we'll be launching a liquidity pool straight after. So those liquidity pools will allow people to actually gain access even quicker. Obviously, it's not going to be $1 billion, but like obviously as we grow, we hope the liquidity pools also grow in size. Um,
Hmm.
but yeah, I think these markets are very liquid. So for us to actually source, it's not that difficult, and that's also the beauty of doing it in a tokenized form, which is because this could happen in a Web 2 way too, honestly as well, right? But the beauty of doing this in tokenized form is that we can really capture the supply in key markets, right? That's London, New York, Singapore, Dubai, Switzerland, um, and we can tokenize out of anywhere. It doesn't really matter, right? So for us, it's like we're just purchasing gold. That's gold being backed, and so we can tokenize out of any of these big markets, and we're not really shoehorned to, hey, we need to make sure that we're getting supply from this city only. Not really, we're just tokenizing global. Well, we have tokenized. Our platform is global, and that just allows us to kind of then meet the demand from different sort of users.
So would that be like, I guess the opposite of that would be like, say you're buying a gold ETF and they could
Yeah.
only source it from certain places based on like regulatory issues or?
Well, gold, yeah, exactly. So I think if you kind of, let's say, if you're, I think with the gold ETF, there's a few differences. One is obviously they're not redeemable, right?
Yeah,
So your effect is it's paper exposure to gold.
yeah,
You don't really also have kind of, I think some do have verification on the amount of gold that there is, some don't, right?
mhm,
And I think if you're kind of an ETF that's based out of New York, you probably have to store your gold in New York. Maybe again, I need to probably read a bit more into this, but I think one of the biggest differentiators from ETFs is they're not really redeemable, right? But also they're just exposure to gold. And I think for us, it's like when we want to bring on gold on, the thesis is how can we make this asset more valuable, more productive?
yeah,
And I think when I think about like, there's a lot to learn from stablecoins because they are the most successful real world asset primitive as well. People forget that they're
yeah,
RWAs, but they are RWAs, right?
yeah,
And the reason why they've done so, the reason I think they found product market fit is because they're far better asset on chain than they are in your bank account or physical cash because it allows you to
yeah,
do so much more with it. I think that's what we're trying to learn on from the gold side as well, right? Because actually, I think the the tokenization aspect itself is quite can be quite commoditized, right? Because
mhm,
it's an asset. uh, I have access to the supply. Somebody else might have access to the supply. So that's not really what's going to drive the competitive mode here. I think,
mhm,
the competitive mode is what can we do. I think one is obviously how can we build out unique ways of distribution,
mhm.
and that's more sort of a distribution point of view. And then the other is from more a product point of view is how can we make gold more unique on chain or more interesting on chain than it's ever been ever,
Yeah,
right? That's kind of,
yeah,
I think a lot of the interesting use cases that hopefully we can unlock.
yeah. So that is really interesting, right? So we come into crypto. Crypto started with Bitcoin, and it's like this is this perfect, pristine asset. It's the best store of value because you can, look at the total supply. But what actually is the most successful product is stablecoins. It's bringing the dollar on chain, and because it added more use cases, I think that what you guys are doing is going to add those more use cases to gold and create, not just a better store of value on chain. You actually have more use cases out of it than you would in any other form. So
Exactly.
yeah,
100%. And I think that's kind of the thing that I'm most excited about, right? Because, hey, how can we evolve gold markets in a very different direction than they've ever been before? And I think the building on crypto should mean making use of the unique architecture of crypto, right? It
yeah,
shouldn't mean, hey, let's just tokenize it, copy paste TradFi approach, and that's meaningless to me, right? It's like what can we do that's gonna really unlock so many more new use cases in new markets which haven't been able to do before.
yeah, yeah. So no, you brought up that it's redeemable. So
Yeah.
are there going to be like set places that you can go to redeem these, or how does that even
Yeah.
look? Like, how would
I
you
mean,
even do that?
redemption wise, we're trying to build out. I mean, the aim, the ambition is to build out the world's largest gold redemption network, right? Um, and that will take a bit of time to build out. But the idea is that there's two ways of redeeming, right? One is through our partners in gold shops,
Mhm.
right? And that's obviously not going to be in every country. Ideally, we want to be in most countries, but hopefully in some of the, especially in Asia, it's a lot more easier to execute. In the UK as well, actually in the US as well, we've been able to crack some partnerships there. And so, the idea is that we should be allowing redemption as low as 1 gram, which by the way
Mhm.
is significantly lower, than the existing competitors, which require redemption of a minimum $1 million, right?
Oh, really? Oh, I didn't know that that.
Yeah, so we over here we're like at around $90 max, right? So it's significant. So that's one way of redeeming.
Mhm.
But obviously, if you do want $1 million of gold with us, you're probably not going to want to redeem that at a jewelry shop or
Yeah.
jewelry store, right? So that would require a different method of redemption. And again, we're able to, if you wanted to sort of, redeem that in Dubai, London, Singapore, any of the key big gold markets, we were able to do that. Or, we can sort of using sort of established delivery networks deliver that to your choice of location as well. Obviously, there's cost consideration, etc., all of that, but the idea is that we should be able to kind of hopefully deliver, hopefully sort of build out multiple redemption avenues.
That's awesome.
And
That's
one of the
awesome.
other pieces, it's like actually, can you also redeem for jewelry, right? You've got gold, and maybe one wants to buy an engagement ring, right? And can we and hopefully we can facilitate that as well. And that's actually an interesting revenue stream for us at some point, right? Because there's this nice small margin that could be made at the point of redemption, especially for jewelry, which is pretty interesting.
That would be pretty awesome. The manlets line up, they buy oro, and then they go redeem it for an actual wedding ring. I mean, that's pretty cool.
Exactly right. And it's great because like maybe it's like it allows you save for an engagement ring or allows you to kind of which historically maybe hey made a decent meme coin profit, put some in ore and then you can redeem that at some point later.
Yeah. Oh, that's cool. Yeah. Oh man, that's awesome. Yeah, I feel like there's a lot of cool things that you could do with it. And then, so with that, I guess just getting the price of gold is just bringing in a price feed on. Is that right? Like
Yeah.
it's gonna is it gonna look it's just gonna be the price of gold, or how is it gonna look
Yes, I mean
to
the gold
users
doesn't
when
really
they're?
have like what you would call as like one international reference price. Obviously, you could call a spot price, but gold has local gold markets have local gold prices, which are usually derived from the international spot rate, but a bit
Okay.
higher because it depends on the dynamics within that gold market specifically, right? Because obviously you have your overlying gold market,
Mhm.
international gold markets, but if the supply is limited in certain countries, maybe the price might be higher, etc. But and then you kind of have the institutional market actually faces the London fix, which is
Mhm.
which is also there, but they're all broadly kind of similar-ish prices. So what we've kind of done is we've worked with Pith to sort of they have a couple of sort of reference oracles on sort of data feeds on gold price on the international gold price, and we're sort of using that as a reference point. And the idea is that we need people to sort of be able to look at the price and maybe if they search gold price today that it's either there or very 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 close to it, right? And that's kind of the thing that we have to sort of be very sure about that price is as close or actually if you're following I think with Pith we've sort of done the analysis already it's pretty much bang on.
Is it okay?
Yeah, exactly.
Oh, that's cool. Oh, that's so cool. I imagine like having gold in DeFi is such like a weird concept to
Yeah,
actually do, but I mean, when you think of Bitcoin or even like wrapped Bitcoin being, kind of like the premier DeFi asset, it's like gold makes a lot of sense, right? I mean, if you
yeah.
want to borrow some money off of a good asset with, you know, thousands of years of history as being a great store of value, it seems like a pretty good idea to do.
Yeah.
That's so cool.
I think which is super interesting because I think a lot of times people kind of look at it, hey, you're buying, let's more on the sense that actually users are going to buy gold from us and then they're going to use that token to borrow against or do activities in DeFi. But people actually forget that there is huge amount of gold owners already existing who cannot do anything with their gold. And I think that's a very interesting use case because it's like, hey, if we can kind of work with those interesting institutions or high net worths who maybe want to actually do release some liquidity potentially, let's say, and the current TradFi ecosystem is not really suited for that. And if we're
Yeah.
able to unlock a lot of use cases for, because if you're like an institution who wants to, or like let's say high net worth, and you have like let's say $1 million in gold, but if you sell the gold, then maybe you will be triggering some capital gains, and you don't want to do that, again, but hey, if you want to, can you borrow against that, in DeFi? And you don't know what DeFi is, but actually it's just lending, right? And if we're able to facilitate that for you because, this is a problem that we're solving for you, that's pretty interesting. So for me, like
That's
both
really
sides of the coin
interesting.
are pretty interesting. It's like facilitating existing demand for gold, but also demand that has also been facilitated. How can we unlock new use cases for that side of the equation?
Yeah, almost like abstract that it's actually DeFi that you're using or blockchain away, and just say like,
Exactly.
hey, what we can offer is something that nobody else has ever offered.
Exactly.
If you want to unlock some liquidity, you can. Oh, that's so
Exactly.
cool. Now, that would be so. Would they be able to actually put their gold on chain? Would they have to like send custody of their
Yeah, I
gold
mean
to
that's
you?
there's a process for us to follow there, right?
Uh huh.
Which is we'll obviously have to take custody of the gold and for us to be able to tokenize it because if we have to verify that that's as a part of our reserves then, right?
Yeah.
But I don't think that's like anything analogous to how it's already done. If you were to actually borrow against your gold, your banks would be taking charge over the gold and all that stuff anyway. And again,
Yeah.
banks do lend against gold, but it's very high. Actually, in Dubai, which is the world's largest vertically gold integrated market, rates are as high as 20-25%, right?
Oh, are they
Um,
really?
yeah, in
Oh,
London,
wow.
which is one of the second biggest gold, which is one of the biggest gold markets as well. Rates are also some similar range. So there's not a lot of banks who are actually lending against gold because it's just the administrative process of doing that. So for us to actually facilitate that would be pretty cool. But again, if you want the capital, it can be, hey, I'm going to store the gold in my vault. I'm going to tokenize it, and then let me take some cap. That's not how it's going to work, right? But I don't think
Yeah,
that
yeah.
should be a sticking point for most users either.
Yeah, yeah. Well, and that would probably be some rates that you guys would be, or that DeFi would be able to beat
Yeah,
by
easily, right?
a lot, right?
Yeah, like so much cheaper, I think. Also quicker. I don't think it's also just about the rates. It's also about being able to execute. I think the reality is that most users actually cannot access that liquidity anyway. So it's like they are willing to pay a specific amount. And in a way, with gold as an asset, if it's appreciating 7-8%, even if you're paying like 12%, net you're actually not you're maybe paying 3-4%, which is not that bad, right?
Yeah,
And that allows kind of the users to then do maybe release some liquidity. Maybe it's also more tax efficient.
yeah, yeah. Oh, that's awesome. Now, one thing that you did mention earlier, you mentioned yield on
Yeah,
the token. So, is there yield in addition to what the historical rate
exactly.
that gold increases by, or is that are you just talking about the yield, like
No,
historical
it's
yield
it's
on
it's
them?
it's additional yield, right? And that's I'm super excited about that. This is kind of, I would say, the piece that I know is a big differentiator for us. It's a thing which allows us to really sort of go out and say, hey, we're doing something new with gold, you which hasn't been done at least on chain before. It is the kind of yield that we're talking about. It is available to big institutions in the gold world, but it's not
Hmm.
really it's not democrat. And people don't even know that hey, I can kind of earn a yield on gold, right? This whole
Yeah.
idea of like gold always been seen as a static store of value asset.
Yeah,
Um,
it's a rock, right? People
the
like
rock,
it's
right?
like Warren
And
Buffett would always say like I don't own gold because it's a rock that doesn't do anything, but
exactly.
it's like
So for
actually it does
us
a
to be able
lot.
to exactly so for us to be able to offer real yield on, and that's around 3-4%. So 3-4% on top of gold appreciation. So
Wow.
we're saying around 11-12% at least, right, every year. That is pretty strong, and this is real yield. And then maybe on top of that, maybe you can deposit your gold tokens in a liquidity pool and earn more
Yeah.
yield, right? So it's like
Yeah.
so there's a lot of interesting ways of maybe earning real yield. I mean, there's like DeFi yield and real yield, but we're offering sort of the way it would work principally is that let's say you buy one Aura token, you stake
Hmm.
that Aura token, and when you stake that, you'll be sort of eligible for that yield that and we obviously actually generate that yield off chain rather than on chain, which also makes it more, I would say, sticky versus if we're just dependent on kind of on-chain markets, which kind of might make that yield more volatile and not as certain. But in this aspect, we're obviously making it a bit more. This is off-chain yield that's generated, and then we're passing that yield on to the users, and it's a great way because I think it's also generally, unless you're trading gold markets on a daily basis, most users of gold are long on gold. right?
Yeah.
You're not buying gold. It's not your horizon for investing in gold is a lot longer, right?
Yeah.
And
Yeah.
so it makes total sense to kind of, hey, let's have a product which is going to give me 3 to 4% additional yield on gold, uh, and maybe then I can do so much more. Maybe I can also use that sort of, we're going to actually. I don't know if this is going to hopefully come out after we launch, like in the next few weeks. But I think the ticker is gold, and so
Awesome.
when you sort of when you stake gold, you get gold plus, and this gold plus,
Oh,
you
awesome.
know. Uh, how we're obviously thinking about different ways of kind of one of the aims for us is like how can we get this yield to as many people as possible. So I also one of the other ways to look at this is just like a gold savings account,
Yeah.
so you're we're also actually trying to like hopefully let's see how this goes, but we're trying to get this yield a Sharia compliance certification as well. And I think specifically in kind of the sort of Muslim world, or UAE and Indonesia, Malaysia, where we have like a lot of strong inroads and some partnerships over there. I feel like that would be quite an interesting product for people to actually get yield on gold, which historically hasn't kind of happened. And I think that's like something which is like when I speak about it, it makes a lot of people really excited. And I think it's a big differentiating factor big differentiating factor for us.
Sounds awesome. So what is that yield coming from then, right? So this is something that's, you said it's kind of standard in the gold world, but like what? Maybe tell it to us
Yeah.
in
I mean, then
blockchain
like
terms.
yeah, like the sort of the nuts and bolts, right? If you're if you're a jeweler or a refiner, your biggest input cost to do your business is gold,
Yeah,
right?
yeah.
And so now either you have to finance that, or you're going to finance it somehow, right? Either equity completely or via debt. Now the reality is that obviously debt is more capital efficient, cost efficient to finance by. But the reality is that as a gold business, it's very hard to get financing in today's world. There's a bit of a political sort of context here as well, which is historically the gold markets were very Western based, which is London and Switzerland particularly. What has ended up happening over the past 20, 30 years is that Dubai has become the center of the gold markets, right? There's a few reasons. One is obviously location wise. It's much more closer to true gold consumption markets. And what I mean that is India, Bangkok, Indonesia, Malaysia, sort of the demand has always been, at least consumer jewelry demand has always been a lot more higher in this side of the world. And historically, what used to happen is gold used to go from Africa, come to Dubai, go to Switzerland for refining, then come to Dubai, go to India, get manufactured. It would just be like a very sort of fragmented process. And now Dubai, sort of the past 20, 30 years, has built this market where it's like, hey, let the gold come from Africa. We can refine it here. We can actually get it made in jewelry here or bars here, and then it can go to elsewhere.
Yeah.
And so
Or
that's
they
kind of
do the whole process there.
exactly. So it's a huge
Sort yeah.
vertically integrated market, and also because Dubai itself is a big consumption market,
Yeah, yeah.
and that kind of has been threatening Switzerland and London's kind of sort of importance as gold capitals, and so a lot of the bullion banks who have historically been actually situated in London and Switzerland have refused to kind of give financing to companies in Asia, right? And especially in Dubai, which is again, it's kind of phenomenal to see that obviously there's a bit of threat, so they're like, let's play the game, right? So anyway, so if you're a jeweler or refiner, you wanted to get financing, very difficult to get financing, and even in London, and by the way, it's not that easy. The bullion banks are very much like serving the interests of the top refiners. So it's a bit of a
Yeah.
cartel at the top.
Yeah, yeah, yeah.
These bullion banks are kind of, but historically, let's say if you were to even get like financing from banks, either you can kind of get bank debt financing, right, and then you would be putting complex hedges on top, because obviously gold prices are moving quite a bit. So maybe so and that's kind of one model that you would do, and that makes sense for a lot of different players if they're trading actively, if there's maybe a different business model. But there's been kind of this mechanism which is called gold leasing, and a lot of people actually don't know this, but gold owned by central banks is also leased out. So central banks own a lot of gold. They are like, okay, this gold is not earning a return. So bullion banks would borrow or lease this gold from central banks. And so what leads in the sense that it's rented because the ownership of the gold remains with the principal owner, but they just rent it out and they would pay the central banks the lease rate of 60, 70 bips, right? So central banks are earning a bit of yield. And then they would use this gold and they would kind of use this and lease it out to jewelers and refiners. Now, why it's like super elegant for jewelers and refiners is because they're borrowing or leasing or renting in gold, right? And their return, their the sort of the lease rate is also in gold. And so now suddenly they're not really exposed to any price movements in gold. They don't really care what time. Obviously, if gold moves up and down, but they're not necessarily, at least from a pure financial sort of funding point of view, they don't need to hedge themselves anymore because they're they're
Paying in
borrowing,
gold.
they're leasing in gold, they need to pay in gold, and they're earning, their revenues are based in gold. So it's a lot more cleaner structure.
Yeah.
And so what ended up happening around like 10 years ago is a bunch of these new players who came said, well, hey, listen, there's a huge problem with financing gold businesses. How about there's this one side of users who own insane amounts of gold, and ignore central banks, but actually institutions, high net worths, right? And they're used to paying storage fees every single year, around 50 bips on their gold. Um, and these guys are long on gold. They're holding their gold for 4, 5, 10, 15, 20 years, but they're paying storage fees annually, which means that instead of sometimes paying the storage fees by cash, they're just reducing their gold a bit by bit every year. And there's one side who needs financing, and there's one side who has the gold, but paying storage fees. So how about we sort of marketplace match those users, right? And that's where kind of this sort of the concept is gold leasing, where your gold is leased out by jewelers and refiners. It's like a working capital facility. These jewelers and refiners then effectively pay you a lease rate in gold on a monthly basis. Sometimes these facilities roll over, and it's just a great way for both parties to kind of be able to sort of solve a key problem here. Obviously, these structures are like very safe, no defaults.
Yeah.
They're all kind of done in, bank guarantees, insurance, all in play to allow kind of to build out, to allow a bit of certainty to the true owners of gold as well. But I think it's like a very interesting way for people to actually earn a productive sort of yield on their gold. And that's where we're like, hey, if we bring this on chain, suddenly we can kind of expand this usage to a bunch of other users, which hasn't happened before.
Yeah. Oh, that's awesome. And I'm like a yield maxi and with my crypto assets. It's like I'm like I love liquid staking tokens. So all my soul's staked on those, and so the idea of staking some gold to get even if 3 to 4% is actually like pretty good, right? Like that's
Yeah,
better than what savings accounts are offering me right now.
exactly. And
And in
that's
the
on
end,
appreciation in gold, right? So you're still getting the underlying benefit of
yeah,
maybe gold appreciates at, I think it's already done like 10% this year, right? But maybe gold appreciates at like a 20, 30%. I don't know. Even if it's 10%, 14% on a very safe asset. And maybe then, we have permissionless pools which allow you to do sort of maybe earn more yield as an LP provider, etc. So there's like,
yeah,
there's ways to maximize that. And I think actually one of the interesting things about gold trading and liquidity pools is that your impermanent loss is quite less, right? Or so actually, if you're thinking of earning additional yield on gold, it's probably like we have this real yield element off chain, but then there's also hopefully when we do launch our liquidity pools for people to actually also be able to earn more yield on their gold, which they cannot do without crypto.
yeah. Yeah, well, and historically, where the gold has sat in a lot of people's portfolio is it's a hedge against inflation. It's a good store of value, so it just sits in your portfolio, for a rainy day. But it's like right now, it's like that with the inflation that we're seeing, especially, I'm in the U.S., so inflation rates have been higher than they've been in a long time. It's like a lot of people are it's a very attractive thing to have in your portfolio right now, where I've seen people calling for 20% plus, like recommending that in
Yeah.
people's portfolios, where it's like, you know, that having that on chain, having, more benefits to owning it on chain. I mean, it seems like a great time to be doing this.
Yeah, no, agreed, 100%. And I think that's like going back to sort of the conversation we had, right? That there's a recommendation, at least 5% or 10%. But I think the guys who are going to be a bit more risk averse are going to do a lot more. And actually, I think it'll be super interesting to see, 'cause, I think this is an asset which becomes, especially just focusing on crypto markets. I think in the bear, where maybe rates for stables and earning for stables are a bit lower than what they're in the bull,
Yeah.
then it becomes a quite interesting asset. Because if rates are low, then gold will increase higher relative to what it has, and which means that, hey, the asset that we have again becomes a lot more interesting.
Yeah. Yeah. No, 100%. Oh, it's so cool, man. Yeah. So what else? What do you see? So it's not quite launched yet. It's coming in
Yeah.
the next pretty soon, right?
Pretty
Or
soon. So we're, I mean, don't want to jinx it, but like we have like few pieces of things that which hopefully coming together next week. We're kind of, we're testing now sort of our DApp. So we're like full in testing. I think we did like 15. I think my co-founder Juan's in Mountain DAO, so tested with 15, 20 people last week. We're gonna do a bit more testing this week. The legal setup, there's one final entity which is getting set up. That's going to hopefully get done in the next couple of weeks. So yeah, I think the idea is that we want to be at least in private beta ASAP. Also, hopefully announce a fundraise, and then yeah, just kind of use that sort of, I think the best learning comes from with users, right? And then just going out
yeah,
in front of users and being able to sort of then iterate the product.
yeah, sounds good. Like I can't wait to use it. Can't wait to check it out. I think this is going to be an amazing product. I think it's such a cool thing for crypto, right? Like when you
Yeah.
think of like what crypto can offer, I feel like this is a very unique use case to bring utility, bring new use cases to an already awesome asset, right? Like
Yeah.
this is something that I'm pretty pumped about, and I'm looking forward to seeing.
Yeah, so thank you so much. Yeah, I'm excited to be honest as well. So I think it'll be good to sort of see, and hopefully we can kind of use. I do think real world assets are one of the ways where a huge amount of sort of users outside of crypto will be onboarded, sort of after stable coins, and I think hopefully gold can play an important role in that.
Yeah, yeah, I think so, 100%. All right, thank you guys so much for tuning in to Solana Weekly. Once again, this is Thomas Bahamas, and I have one final ask for you guys. If you could, please subscribe on whatever player you're listening to. You could leave a review. That would be amazing. If you want to shill me your bags, work for them. But yeah, really appreciate it. And as always, this is not financial advice, but I want you guys to accelerate, move forward, and let's get this bag. I'll catch you guys next week.